The biotech domain was one that took a particularly hard beating in 2022, amid all the macroeconomic chaos that ensued. According to analysts tracking the movement of the most notable biotech ETFs, this market area had seen performance even worse than that of the wider US stock market. In addition to these broader factors, several biotech companies underwent rapid plunges, due to mounting financial constraints and falling short of shareholder expectations. Alternatively, however, in the panic created within these conditions, several biotechnology stocks fell hard despite strong fundamentals and a promising pipeline. The result is the opportunity to grab bargains in this area, leading to inevitable growth. Value investors have some terrific opportunities in the market to seek discounted biotech stocks. In this video, we present the top 5 players in the biotech spaces that are seriously undervalued. We start off our list by taking a look at the giant German biotechnology company, BioNTech SE, which goes by the ticker BNTX. With its market capitalization of over $36 billion and over 4,000 employees, BioNTech is a large and established player in the pharmaceutical space, unlike most companies still trying to enter their commercialization phase. Its pipeline is highly diverse, and primarily relies on messenger RNA technologies. Its BNT211 candidate effectively addresses advanced cell tumors, highlighting the company's prowess in this field. The company had its breakthrough in 2021, in its partnership with Pfizer in producing the Comirnaty vaccination. As a result, its annual revenue in 2021 jumped from $590 million to almost $22 billion in 12 months alone. The opportunity in this domain continues to look strong considering China's struggles with new COVID variant outbreaks, hence BioNTech management raising its COVID vaccine revenue guidance for 2022 to almost $18 billion. In addition to these staggering flows of revenue, the company's expertise in the Comirnaty vaccine also holds tremendous expansion potential. Researchers at BioNTech SE continue to make breakthroughs in their development process, and are likely to continuously enhance vaccine efficacy against COVID-19. Similarly, the company remains confident in the potential of T-cell-based COVID vaccines, which would be a game-changer toward combating future COVID strains. Above all, BioNTech SE's strength remains in its ability to combine varying biotechnologies, to develop groundbreaking treatments for hard-to-treat conditions. This strategy has consistently proven successful for the company. Moreover, its financial position remains stellar with its cash holdings amounting to over $17 billion. BNTX is a great pick, and allows investors to cut through the uncertainty, and share in on epic gains. For the second stock on our list, we turn to look at the Swiss biotech player, VectivBio Holding, which trades under the ticker, VECT. The company is still in its clinical phase, not yet generating revenue, and holds a market capitalization of almost $550 million. Presently, VectivBio's core focus is upon its lead candidate, apraglutide, which treats short bowel syndrome intestinal failure. The treatment is currently undergoing phase 2 trials, and has already been showing remarkable results. According to preliminary figures, patients reported a 50% reduction in the need for support by parenteral nutrition technology. Similarly, 90% of patients were found to be clinical responders to the treatment. Current progress suggests that VectivBio is well on its way to establish itself as among the best treatment options for this form of intestinal deficiency. At present, the only approved drug for this syndrome is Reata Pharmaceuticals AG, which entails daily injections to the patient, without efficacy figures as strong as that of apraglutide. Given these prospects, analysts hold a highly favorable view towards this promising biotech stock. Jefferies initiated a buy position on VECT in December, putting the probability of success at 60%, with peak annual sales as high as $750 million. Similarly, Bank of America recently set for the stock a target price of $19, which is significantly above its present price of $8.70. The stock has all the markings of a clear winner and is thus a screaming buy. Before we move on to the next stock, we'd like you to know that we offer a morning newsletter to our email subscribers. Prior to the market opening, we send our subscribers an informative email about which stocks are moving or about to move. You will get an overview of key earnings reports, recent insider transactions, analyst upgrades, and downgrades. To take advantage of this offer, you can find the link in the description box. If you're still with us, it means you've liked our video. Do click on the like button to show your support. Next up, we take a look into Reata Pharmaceuticals Inc., the American clinical biopharmaceutical player, trading with the ticker RETA. Throughout the last 12 months, RETA has climbed by almost 35% in price, which is remarkable considering the blow that hit the wider market, and biotech stocks in particular. A core driver behind this bullish attitude towards the stock comes with highly encouraging results on Reata's omaveloxolone candidate, aimed towards neuron and muscular dysfunction causing ataxia, leading patients to become wheelchair-bound in their teenagers. After positive Phase 3 results, the candidate is likely to receive FDA approval within February of 2023. The management is fully expecting commercialization within the first quarter, and has been spending on marketing and related expenses. Even though costs are likely to be high for omaveloxolone, its rare condition status makes it highly likely to fall under insurance coverage by most providers. The breakthrough also enhances the company's long-term potential, as preclinical data on omaveloxolone shows that its neurological targeting mechanism could revolutionize treatments on ALS, Parkinson's, epilepsy, Alzheimer's, and dementia. Reata's cash holdings of $436 million give it sufficient runway to push on the development of its pipeline through 2024. Similarly, as further inflection points are realized, one can expect significant price jumps, which would ease further equity financing, if the need arises. RETA stock has all the markings of a winner among biotech stocks, and provides a stellar opportunity for investors seeking to hop on an early opportunity. Coming up next at number 4 is the German chemical and healthcare giant, MERCK KGAA, which trades by the ticker MKGAF in the OTC markets. The company's roots trace back to the 1650s, making it one of the oldest continuing business operations to date, with an employee count of almost 64,000. Its $85 billion market capitalization points to the large scale of operations this biotech player engages in, giving it significant advantage over new entrants facing a range of constraints. Moreover, its globalized nature delivers a high degree of stability to it, which is not typically found within localized companies. The biggest strength of Merck is its diversified nature, without reliance on any one star therapy. It has multiple candidates within its highly diverse pipeline, each of which are in their third phase of development. The most promising of these is its multiple sclerosis treatment candidate, which upon approval by the relevant regulators would act as a game changer in this global market. Furthermore, Merck's market standing enables it to engage in lucrative and strategic partnerships in its development procedures, which facilitates mutual value creation. The company also operates in the life sciences segment, which focuses on delivering the most renowned equipment of research laboratories across the globe. This diverse approach makes Merck one of the most stable biotech players in the game, while still reaping all the growth benefits that come with the sector. In the last 10 years, Merck boasts a compound annual growth rate in its revenue of over 7%, whereas the same metric for its EPS comes in at 23% per annum. Merck is the ideal stock for investors looking to cash in on the bright side of biotech opportunities, whilst also aiming to keep their overall risk exposure at a minimum. The final stock on our list is the gene editing company, CRISPR Therapeutics, which goes by the ticker CRSP. With its game-changing CRISPR gene editing method, CRISPR could potentially bring the biggest disruption in biotechnology seen in the last century. Through this method, rare genetic diseases can be treated by altering, replacing, or straight up deleting gene sequences responsible for adverse conditions. Having acquired the rights to CRISPR's intellectual property, the company stands as a pioneer in this promising domain, and is presently focused on two main programs. These include the treatment of thalassemia and sickle cell disease, both of which represent a giant market, with hardly any viable treatment. The CTX-001 candidate, which addresses both these domains, has already received regulatory designations in the EU and the USA, and is ready to be marketed once the notification is delivered. This is likely to take place within 2023, and could change the tide of the company's future. Similarly, CRISPR is also focusing simultaneously on a different program revolving around regenerative medicine, which repairs and replaces organ tissue by the use of stem cell. Its lead candidate in this area, CTX-110, is currently in its phase 1 clinical trial. This too places CRISPR Therapeutics on another billion-dollar opportunity, which could take the healthcare sector by storm. Although there is a degree of uncertainty with these next-gen biotechnological innovations, CRISPR is definitely aiming to bring radical disruption to healthcare and biotechnology. Placing your bets on this ambitious star could very well pay off while rewarding its shareholders exponentially. That's all from us in this video. We hope the insight we aimed to deliver has proven valuable to you, and would allow you to take on an enhanced biotech growth strategy. We would love to hear your feedback about our list in the comments below. To gain a deeper insight into different stocks that are fit for various investment strategies, be sure to take a look at our website, stockstelegraph.com.